Okay, James, everyone. So this is MFX, and today I'm just going to be talking about a trade breakdown. And this trade breakdown, to be precise, this amazing trade breakdown, to be precise, I'm not going to lie, this is an amazing trade. 33 with a proper risk proper management, you should be making a huge ton of money from this particular trade. But the sad part of this is that I never took this trade, okay? I'm gonna be honest with you guys. I never took this trade. It was just something I studied after the whole trade played out. Okay, it was a trade study, and why I'm interested in this trade is because the concepts we discussed on our previous video, they all clearly demonstrated their effectiveness in this price action. It all played out. So I'm gonna walk you guys through my system of approach. So that I'm gonna show you guys how the whole concept we talked about on our previous video played out right in this video. So I'll walk you guys from our weekly time frame. Sorry, gonna walk you guys from our weekly time frame. So the first thing I do whenever I want to approach my chart is take a look at my what we call top-down analysis, and that's identifying the structure of the higher time frame, which is institutional structure. So that is the fact that you can see that XAU have been way bullish for a very long time now, and currently is still bullish, although we are undergoing a retracement phase based on my understanding. And we could see that we had this range, this was our current range, and price after this rejection of price, we had the mitigation of this range PY. And if you could remember in our previous video, we talked about this. What causes change of trend or retracement? And we talked about the fact that whenever price mitigates a higher time frame supply or demand zone, it always changes trend or retraces to the opposite side. You could see that higher time frame demand zone, price mitigates it and up we go. Price mitigates it and up we go. Price mitigates it and up we go. Yeah. So you could see how this whole stuff played out pretty well in price, played out pretty well in price. And the other concept we talk about or rule is also absorption of price and absorption of price. And you could see it right here. Absorption, which is the liquidity gap without the candlestick body close. You can see it, liquidity gap, okay, liquidity gap, okay. This is liquidity. Price grabs it, also candlestick body close. What do we expect? Price was going to retrace, okay, or change clear. So it's that simple. It's it's very simple. Okay, so we've identified that we are bullish, but on a higher time frame price mitigated this range POI, and this is a retracement or a change of trend. We are not quite sure. So the next thing we're going to look at is because there was nobody close on our weekly and monthly and even 3 month time frame of this liquidity graph or absorption, what I call absorption. Okay, sorry, this is not our absorption, this is a liquidity graph of this liquidity graph. Okay, because there was nobody close, we I could not say that this range was a breakup structure. Okay. I can't say this is a breakup structure. Okay. I can call this a replacement and I'm still very bullish on XA. So going down to a lower time frame, I identified this after this is a breakup structure, second breakup structure, MB1, MB2. This is my current range, okay, because immediately price breaks this, it's immediately price breaks this for me. This it retraces after mitigating this PI, retraces and breaks again, validating this as my current range. This is how I identify my range. So I'm just walking you guys through my system of approach. And what caught my attention, I think that was on Tuesday, was after price, although this is part of my study, after price mitigated this weekly POI that we identified earlier, and on our 4-hour time frame, we had liquidity grabs, okay, and absorption, okay. It absorbed. This is the low. So price absorb this, and there was nobody close. Absorb liquidity gap again, but with this liquidity, look at this liquidity again, look at this liquidity, and fails to break structure lower. Okay, fails to break this lower with a body close. That's what we said here. We said um absorption, liquidity gap without the candlestick body close. Okay, liquidity gap without the candlestick body close. And all these were part of the reason why I took the trade I took on Tuesday. If you could remember, I think in that video we were on the live trade, we played pretty well. So after I saw this, that price was rejecting this, it failed to create a block of structure. I knew based on this study, based on this rule, the absorption liquidity gap without a candlestick body lows can also change the trend, or also cause retracement and higher time frame liquidity gap also, and coupled with mitigation of higher time frame supply or demand zone. So there were three rules we had here in place on this particular price action. Okay, on this particular price action. That was why I took a trade. I think we talked about that trade right here. We had this MB1, MB2, this POI, and I mitigated it, and I refined it to the 1 minute time frame and took my profit here. I think that was around 5.3 hour, if I'm not mistaken. It should be on a folder. Yep, this is it. Okay, yeah. One, two, three. And to pull the stuff up. Okay, yeah. So this is the trade. So you could see we had first block of structure. Remember what we said here in this video. Double block of structure formation to the opposite side of the current trend can also cause change of trend or retracement. So we had first block of structure, second block of structure, making a double block of structure. And I saw a demand zone, and I refined this demand zone down to my 1 minute time frame and took this as my exit. So what am I saying? I'm trying to show you guys how these rules can make the whole stuff so simple for you. And that was the same thing that played out here. Just that my only mistake was I was looking at this breakup structure on 15 minutes. That's one of the problems that traders face. A lot of the times when we are having let's say a winning streak on a particular time frame, we tend to be so married to that particular time frame, we forget to zoom out and take a bigger picture of the current price to uh, indicate where institutional structure is going to be heading. So that was what happened to me right here. So because I was interested in this, I was looking at this break of structure downwards as my uh, current range, and that price was going to actually price did react to this supply zone. This was the supply zone I had, and I was thinking price was going to sell and keep selling downwards when it mitigates this zone. Yep, price reacted to this zone, but it never got to my take profits, or my okay, this was my first take profit. It never even got to my first take profit. So after this, I got stopped out that day. Yep. So you could see 4 hours absorption, 4 hours absorption, liquidity gap without the body stick, without the candlestick body close, absorbed, absorbed, and retracement, absorbed, absorbed, and retracement. So the mistake I made right here was using, remember what I told you guys, this as my range. Meanwhile, price, I think, was interested in mitigating this range PI, which was not yet mitigated, which was not yet mitigated. So that was why I took a loss. So this is simple. Go back to 15 minutes time frame, and you could see where this range was at. Although I saw this, but like I said, my thoughts were glued to the whole my thoughts were glued to the whole 15 minutes talk and all that and all that. I was concerned about this. I wasn't concerned about the higher picture, which is this. And even currently, I'm not concerned about this. I feel price is going on. Price seeks to mitigate this. And even maybe continue I feel price is going to mitigate this institutional POI and maybe continue higher. Why do I say this? That is because on a weekly time frame, there was no candlestick body close. So I can identify this as a block of structure. Remember what we talked about liquidity gap, changes, can change, can cause change of trend or replacement. And this was basically a liquidity gap and a mitigation of higher time frame supply zone, which can also cause change of trend or retracement. So that's it. And this trade is very simple. Liquidity gap, mitigation of higher time frame demand zone. You go down to your 15 minutes time frame, or that should be it. You could see this was your on your 4 hours walk with me, and we are refining. This is how I refine. I walk down. This is how I refine. Look at my 45 minutes. Still pretty good, pretty clear. UI. I jump to my 30 minutes. Pretty good, pretty clear. And down to 15 minutes. Okay. Yep. The 15 minutes looks great. And the next place I seek for price clarity is 5 minutes. Yep. And I could see this. Okay. Then I go to 1 minute. And let's take a look at what I was seeing. Yeah, you'll see it. Boom. This. So it's that simple. And watch how price delivered pretty well during the New York session on Wednesday. Yeah, price delivered. Okay. I think it got to TP on business session on Thursday. So that's that. So I believe this week was educative for you. If you find it helpful to the user, please like, subscribe, and also share. Thank you.